Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, pretty broad-based down day. A lot of people are blaming it just on oil. Some are blaming it on grease. Some are blaming it on just profit takers because now you could sell the market and pay taxes in 2016. There's probably a lot of things, that stirred the pot today to have us now 3.5% off the highs. So, the question is, what does that mean? What's next? So moving forward, how do we make money, right? How do you make money as an active trader? How do you make money as a swing trader? What side of the trend should we be? And a lot of that, has to do with what your time frame is and what your comfort level is. Last week we talked about the S&P, right? We talked about how here you had the S&P. This was the prior high. Remember that 2079. You had your V bottom right here that broke out above a prior high and held it, and then it continued. Okay, then when you broke the 8-day here, that was a good spot to reduce as a trader. And then you had that V bottom into Fed day. And then it was getting a little wishy-washy up here, trying to hold above the prior high. And what you didn't want to see is a breakout failure if you were a short-term momentum trader. So once we broke, you could also call this an ascending channel. And I'll get it a little closer so you could see. Once we broke that ascending channel, okay, and also closed. Maybe on this day you didn't really sell too many longs. Like, okay, it's the last few sessions are a little wishy-washy. But once on this day when we broke below 2078 with some authority, that was really somewhat of your sell signal. Okay, that's when you lost the 8-day and that's when you lost that high. And now here we are, coming into this week. So this morning, I put a list in my morning note of pivots. Okay, this 2048 happened to be the low from Friday, which is my pivot because I came in long the spiders, okay? And I wound up getting stopped out there and pretty much didn't do much the rest of the day, just small little micro trades. So you go back to some other things I talked about. I listed in the note just pivots because that's all you have. Once they look, first of all, look how, you saw the S&P make a new high and the Qs didn't right there. That was a small signal that, technology was a little bit weaker. And then the pivot here for the Qs was the prior low here of 102.44. So that could have been your stop. Okay. The IWM tried to show relative strength. It tried to hang in there. You had your first of all, this was the pivot, just so how I come up with pivots. Okay, first of all, right here you had your first little outside day. It didn't quite make a whole new high, but it tried and then failed and closed in the lows. So that was a little bit of a wake-up call if you were in a lot of it, thinking that we were going to get all these new inflows, we're going to go right to 122 and be off to the races. Well, this day gave you that shadow across the bow, and then on this day we closed below the 8-day, so that was one of your signals to get out of the way. And if you did that, then today you're like, oh, maybe the 50-day holds. So you go to the 5-minute, okay, just to, again, I want you guys to sort of learn my style. You had this gap down in the IWM. So right around here, I'm like, oh, IWM's acting decent. Okay, what you could do is buy it versus the morning low. Okay, because it could have changed, it could have went up, all those things. It was pretty decent support. And then, it had a nice little flag here and then came in, tried to hold that low and then failed. So that was your stop. You risked 40 cents on something that was trying to hang in there. Okay, at this point, does the IWMs look broken? I wouldn't say they look broken, but it lost some momentum. This ascending channel broke to the downside. If you tried to just cross the dots here for a false breakout, you could say that this was a false breakout. Okay, going sideways if you want to judge it from here. Not quite a false breakout, but it better hold this area and get going soon. Like the whole market itself, could be vulnerable if we don't get an engulfing day soon. Okay, we've already probably retraced a little bit more than the active momentum traders would like. Like me, I'm not in 8, 9 positions long because things started to get wishy-washy. Especially the banks. The banks were really weak today. And guys, when I get out of my Bank of America and Citigroup, people are like, why did you get out of the banks? You think it could be good next year. So right now, I think my e-signal is having some problems. Like, why'd you get out? I'm like, why? Because I was looking to see if we could have continued momentum into the new year, or, is there a signal saying, be careful? You look at the XLF, okay, the signal here in the XLF happened right here. Okay, you had your upper flag. Okay, so you go to the chart, you look at it like this. This is what the market looked like up into this day, and it looked pretty good. above the 8-day. I don't know why this is moving on me. I'm sorry. Above the 8-day, a nice little V bottom near the highs. So as long as momentum stayed, perhaps we were going to get additional gains. So on this day, okay, you had that outside day that engulfed this upper range. For me, that was my sell signal. That was the day I got out of Bank of America and Citigroup, and I saved myself this, this downside move. So now I'm going to need to figure out, after even a down move like this, can we continue? Do we get some kind of red dog reversal, at the prior low, to create some kind of pattern to at least base some new long exposure on? So one of the things we do when we're in a corrective phase is we change our, approach. So from that whole move from Fed Day, if you had 5, 6, 7, 8 stocks in portfolio approach until we lost the 8-day again or the 21-day, you go back to tactical. And in tactical mode, what you got to do is you have to be quick. You get this quick little RDR for cash flow. So you put the trade on. When it breaks the level, comes back above it, maybe you get a good push, you make some cash flow versus the low, then you trail it. Because sometimes it's just a little squeeze, just a little buy program, then it runs out of gas, and you got to get out of the way and say, okay, I'm done. Because you had somebody on the other side of the trade that was waiting for the H sell setup pattern where you had the bounce. It was just say it was down for 4 days. You had the little bounce at the red dog reversal area, and then it bounces back up to reclaim maybe a third of that whole move and then starts rolling over. So that's the H. That's when you start getting shorted, and then when it breaks that low, it continues. So like Facebook was an example of that. It was one of my candidates to go long with Apple today, and it was a great trade for a lot of people on the VTF because it did go long, or it did bounce. It went positive and actually had some strength before rolling over. So if you go to Facebook, just to show you, the differences in the trade. First of all, this is when it lost some momentum. Okay, tried to make a new high and then couldn't really hold it. So here was your flag, combined with somewhat of an outside day. I don't know why this is doing it. So today it was red. Went from, first it stopped everybody out. Went red through the prior low here before getting strong and bouncing and then rolling over again. So if you go to this 60-minute chart, sorry, my e-signal is just, I don't know what it's doing. If you go to the 60-minute chart, okay, all right, I might not have charts for you guys. All right, so let's go to the 60-minute chart. All right, this thing is just moving around. All right, let's just get away from the charts for now. I'll have my tech department check it out. But anyway, it went from, first it flushed out some of the leftover longs that might have been sitting in it from the prior week, thinking it would hold 80 and it didn't. Then you had that reversal and was up like 80 cents, and then slowly the market started to deteriorate. We lost our 50-day, and a lot of strong stocks just turned weak. So another kind of rule to write down is kind of judge each stock hour to hour. I usually love to do it day to day or week to week, but when you're in a corrective environment and you're not sure where things are going to go, something might flash some relative strength for like 15, 20 minutes, and there's a trade there, and then all of a sudden you think you could buy or dip, and then it just keeps going lower and lower and lower, and all of a sudden you turned a good scalp cash flow trade into a loss, and then it could turn into a disaster if you're like, oh, well, this was strong from 10 to 10:30, and meanwhile from 10:30 to 11:30 there was no buyers. I remember for a while last year that would happen where, people would be thinking short, they'd gap it open, they'd squeeze everybody and be like, oh my God, it's so strong, and then the next day gap down and go down, and there was not a buyer there, and from day to day, the market had absolutely no memory. So when you're in a corrective phase and everyone's trying to figure out spots, there could be no memory from hour to hour. So, just keep that in mind. So you go to Facebook again real quick. Let's see, it's, at this point, it's already retraced pretty much this entire move, so it's just choppy. It's still above some of the moving averages, but whatever. Today, I know even Apple, people are saying to me that, you're good at getting out of the way, but you got to be better shorting. And I think that's true. Okay, first of all, we rode this trend. It was great when it happened in October through November. This was awesome here, this tier 2 trade where it broke out above a flag. Okay, and then this is when it broke. So then we had this, descending channel here, which looked pretty good. Okay, here. Okay, when things happen that shouldn't happen, you take notice. And this, you had this trade here where I got real excited. Remember, I think it was a Friday. We started buying more. Okay, and sorry, this e-signal is just whatever. It's just not holding in there, and I can't do this again. So anyway, broke out here, and then the next day, remember the red dog reversal where it pushed through this 114.50, and that got me out of some. And then once it came back to where it broke out from here, I'm like, that shouldn't have happened. So I got stopped out of the rest of my Apple, probably around 112-ish or 112.50, and at least I avoided, 112 down to what did it go as low as 105 today. It's yeah, that's as a trader, that if you're just buying that hurts, and you probably can't even stay with it. So, you had your descending channel, went sideways, little RDR. I think even Laz might have put that as a short on that, or when this broke, and instead I got out of the way, and some guys made money short. Now the question is, did it do an overthrow through a prior pivot to get people out, because that's what the computers do, and can we bounce? But even if we bounce, it just this, this moving, it's below the moving averages now, and it's probably not going to have anything substantial to earnings if it has anything. So at this point, I would just take small trades. I was just talking to Sperling about that. I'm like, I'm not excited about any setups right now. Even if some of these stocks, bounce, they're below all the moving averages. It's going to take a lot of time to rebuild. We have none of those, pent-up trades that look like they're about to break higher, blah, blah, blah. I guess you saw potentially in the bios maybe there's some of that. Like this is an exciting little trade. That if you're good and you hold bios where it's so tight near highs, you sometimes get a good breakout trade and it continues. This came off the highs but still looks good. But that we don't have this kind of setup in any kind of high beta names really. You look at Guild. It got some action today on some news and didn't close on highs, but it's still hanging in there. See if how it looks tomorrow. The IBBs, some relative strength, but again, buying strength in this type of tape, it's kind of tough. I almost bought this like 2 times when the bio started going. I just stayed away from it. So see how it handles this inside channel right here. Oil. Everyone's like, Red Dog, you said it can go below 50. Where's your buy price? I'm like, well, if it, I'm not sure exactly what it's going to do. Is it going to kiss, 49.95 and then gap up tomorrow and trap everybody who or leftover shorts? I don't know. It could happen. In my head, I feel like it's definitely corrected a lot, but it had the capitulation type move that's really exciting, that did something weird that nobody knew about, like kind of like the RSX trade. On this trade, you had that capitulation. The world thought like Russia was going to default. Things were going nuts, and you had that day-and-a-half trade, and it's really done nothing since. So we'll watch Russia to see if something happens moving forward. It's coming into a tighter range there. But you haven't seen that in the USO yet. USO is just on the dead lows, below every moving average out there, just to show you why you haven't seen me long oil pretty much once in the last 6 months, or at least maybe for a second. Look how broken this is. You had the accelerated trend break right here, a more intermediate trend break right there, a macro trend break right here. So if you follow trends, you could have got out so many different times depending on who you are as a trader. Here, if you're quick and active and you trade every day and you're in front of your screens. Here, if you do a little bit more work and you understand technical analysis and you follow maybe us on our morning note or whatever. And then here, if you're an investor, I guess, and look where you are at $18.79. This was about $80, I think, in oil. Now we're down to $50, so $30 you could have saved yourself. So at this point, not much you see here except for yet another threshold broken, closed on the lows, and now we'll have to see what's next. Okay, do we get that really crazy open that everyone gets scared out of there, what? Because people like testing longs. People don't believe that the market, could correct more than this. And today on Fox Business, like, what do you think? I'm like, we're oversold. We're minus 30. We lost our momentum trends. We're still hanging on to our intermediate trends, but most stocks look broken and they look, set up. So that gives me caution. As far as oil, it's going to play a factor. Was this little touch a trap to then gap up? And I guess if it reclaims 53 and doesn't look back, that would cause a pain trade there, but I kind of don't think that's going to happen. And then you have this whole Greece scenario, the Grexit. I don't think anyone thought that a country could leave the Eurozone. And then this weekend with the newspaper article saying Germany, if the opposite side wins and they want to say, okay, we don't want austerity now, we don't want to pay you back, they might get kicked out. And then there's a lot of collateral damage there. And then how does Spain like that, or Portugal, or all those other guys that borrowed all that money? So no one truly knows. So took a little fluff out, and now we'll figure it out. sometimes the markets are trending and you could hold a lot of positions. Sometimes it could just trade. And I think as a trader, even like I remember October, markets were volatile, but there was a lot of opportunity there. Volume picked up, volatility picked up. You could play ranges versus just a tick, tick, tick grind where everyone says, oh, I don't want to be long, but I have to just sit. So if volatility stays, I think things will get more interesting. I even think if things go lower, trading could actually get better because, things will move around and you'll be able to see what's weak, where the relative strength, relative weakness is, and pick your stocks better and trade and make money versus just sitting. If you were just complaining about the uptrend for the last 5-6 years and you fought it, don't complain about stocks moving around and big wide range red bars, because then that's where you should be making your money. And with all that said, today was kind of like this whole 4-day time period wasn't easy. They took the market, some of the air out in the last 2 days of the year while you might have been away. And then if you thought new flows would come in, and I was sort of thinking, trying to be cute, that new flows would come in, boom. Friday they gave you a gap up to sell, which at least that happened. But then today they really didn't give you a way out. And the prudent traders like me, got stopped out of, what I tried to time. And now, hopefully they don't just gap and gun it tomorrow, which if they do, they do. I've seen crazier things, but you can't just trade for that when things are under a bit of pressure and you don't know where it's going to go. I'd rather be, less overnight and trade intraday when I have levels versus levels, more of an edge. So this way I don't walk into 2 flat tires like I had today. 2 flat tires I could fix. If my engine blew and I got into an accident, you know what, I wouldn't want to be driving too much in January. So today, lost some money, and then I pretty much stayed out of the way the rest of the day, and actually was happy that if sometimes, you come in with like 7 longs and you have this overnight move and you're like, if someone would have just stole me on the way to work at 11:30, I would have made much more money than trading the first hour and a half. Well, at least today, if I didn't trade out of my positions, I would have lost probably 3 times more. So that's all you could do. Salvage your trades, figure things out, and move on. Scott Redler, T3 Live. I'll see you tomorrow morning at the recap. Or no, sure, at the morning call, and hopefully my e-signal won't be jumpy. Have a good night.